How's it going, everyone? Welcome back to another Hbar update. Now, I'm going to discuss why I think Hbar is one step away from a dollar plus target. Now, we'll start with this range and then we'll zoom out to a broader one. I have two strategies, a chart pattern strategy and a Fibonacci strategy. First of all, I actually call this double bottom down at 13 to 14 cents. If you remember those very updates, let me know in the comment section below. I was arguing that once this level breaks 18 to 19.5 cent, we would shoot up into 25 cent and then into 35 cent. It actually hasn't yet reached 35 cent. The reason why I have this marked out is due to my Fibonacci strategy, which is one part of it, but the chart pattern actually calls for the 40 cent high. So this would be through this 886 fib. So in order to meet this target, you have to break through this area. Now, just focusing on the Fibonacci strategy, if this breaks, I have these as my price targets. So the fact that this double bottom needs to reach 40 cent, which is through the 886 to meet this target, just by doing so, it's going to validate further price targets. Now, maybe it has to correct from here first, but anyways, by meeting this, we will project even higher. Even if there is a move down from here, it just needs to hold above 25 cent and it will continue to 54 and then to 82 cent. But these fibs are not completed at that point. That is just where we correct potentially, and then there are higher projections. You can see at a dollar plus, maybe even as high as $2. But the reason why I'm focused on around the dollar area, more specifically the $1.20 area to $1.28 area, is when we start zooming out and look at the bear market that we experienced through 2021. And you can see that where we've created this range the majority of this year is off of rejecting the macro 786, 886. So it shows you how important this level is, because by breaking it, we're going to get higher projections. It shows you the weight of this. Look how long it's been since we were up there. 7, 8 months have passed since we were up at these price points. A 7th month, 8th month dip. You know, we don't want to be experiencing anything like that. We want to see this 786, 886 broken. Funnily enough, they're overlapping with the micro and the macro. One range is just taking up this year, the other one's taking up the last few years. So once we're done and dusted, once this is left behind, it's going to start a parabolic rise. And I think that $1.20, out of the range of this year, it's a very significant target. And the multi-year range, it's only the very first multi-year target. So a bear market can start from there, absolutely. But it could also just might be the first macro target. It could continue into $2. But be a bit more conservative, I think, because what was just experienced the last few months, there was a great gain before that, but this didn't happen to majority of the market. If you do hold other altcoins, you'd know that. You would have felt it, that past it, because even with such a gain, it still went down 70%, and that's considered a dip. You really don't want to hold on to the bear market, as you'd lose over 90% of what's there. There you go, minus 93% correction. So at the $1.20 mark, consider your strategy. That's it from me today. Like, subscribe, comment, and share. If you want to jump into my community, I've got a Discord. If you want further analysis and want to hear more of my own thoughts, I've also got an ebook. Or if you want to learn the strategy one-to-one with myself, book a live call with myself.